Let's bring on board another management, and we have the management of Titagarh Rail Systems joining you with us this afternoon. Umesh Chowdhary, Vice Chairman and Managing Director of the company, joining you with us this afternoon. Thank you so much, Mr. Chowdhary, for joining you with us this afternoon. And obviously, Mr. Chowdhary, there are a couple of news flows. Let's not forget the order wins that have been coming in as well. Other than that, in terms of a lot of allocation coming in from small cap funds, other funds coming in as well. Let's start by talking just about the company in terms of, what is it that we could expect from the company that is attracting so many investors to enter into the company? What is it that is one thing that we should watch out for from the company?
So very good afternoon. Thank you for having me with your channel. So yes, there has been a lot of buzz in the sector that we belong to, and we are actually being able to enjoy the tailwind that the infrastructure and the policies of the government in terms of the railway infrastructure and the railway growth is providing to our industry. As far as the company is concerned, yes, we've been fortunate to get some good wins in terms of contract. Of course, starting from the big wagon tender to the Vande Bharat to a consortium with BHEL, then the wheel in consortium with Ramakrishna Forging, and then recently we won the Surat metro contract. So effectively, all this is, if you look at Titagarh Rail Systems, we have two segments that we operate in, the freight rail systems and the passenger rail systems. And both these segments have a very large tailwind in terms of the outlook of the government and also the need of the country. And Titagarh being a kind of a prominent player in both these segments, that is what probably is getting us the attention of the markets. The Capital Group, which the small cap fund belongs to, has also taken about 5.5% preferential equity or equity by the preferential route, which has been approved last week.
I have a question for you on this small cap world fund pref allotment, 289 crore. Just curious to understand, almost 290 crore to a single fund. They wanted all of this for themselves, or you could have distributed it among some other big investors or small cap funds as well. 300 crore for one single small cap fund?
Sure. You see, this was they're a part of a very large group, and we wanted to raise capital. And since it's a very marquee investor who was willing to come in with a preferential issuance of equity with the necessary lock-in and all of that, so we went ahead with this issuance. It was not a QIP. This was a preferential route. So if it was a QIP, then we would have done the book building and all of that. But this was not a part of that.
It's specific pref issue to a marquee fund, clearly. Umesh, I want to understand, you are one of the companies, very few companies. I mean, if I understand it well, there is a kind of a demand-supply mismatch, right? The demand suddenly has come up over the years very large, and not enough supplies existed in the system. That's why companies such as yours, and barely we can count on one hand fingertips, which are supplying some of these. How long do you think the demand supply will remain favorable for you to keep on expanding and working towards next 3-4 years or more? Sitting here, how's the visibility?
So, firstly, I don't think that there is any demand and supply mismatch. So, if you look at this, what we have done in the past, we have created capacity. And we have continued to create capacity over the last several years, because if we look at the segment that we belong to, the infrastructure sector in the railways, the initial investment goes into the tracks, the signaling, and all of that. The rolling stock is the last mile or the last end of the investment cycle. So we clearly saw that the current government was investing in the infrastructure. The DFC was being pushed. Additional track, and if you recollect, the first time under this government, the UPA one or the Modi government one, Indian Railways borrowed money from the likes of LIC in order to create infrastructure. So we were very clear that once the infrastructure is set or is created, it is like, in an industry parlance, it is like creating capacity. And then if you want to utilize that capacity, you need the rolling stock. So we had created capacity in terms of manufacturing rolling stock, and we were very clear that the demand will come. So there is no shortage per se, so whatever is the requirement of the government or the customers, we are being able to, and the industry is being able to cater to that. How long will this last? I believe that the infrastructure story of the country, and the way the whole thing of India becoming a 5 trillion, 7 trillion, and a $10 trillion economy, one of the key elements to that is going to be that India has to become a cost-effective economy, and logistics cost, which is currently 14%, has to come down to a single digit. For that to happen, railway and waterways are the only two ways. And with the geographical limitation of waterways, railway becomes the only logical alternative. So we see that this kind of push for the railway investments, which we are in fact seeing in developed countries like Europe, or continents like Europe also now coming back, is going to continue in a country like India for at least the next decade. And we don't know after that what's going to happen.
Meant to say was, when I said demand supply mismatch, I meant to say the tailwind for demand is very wide.
That's good.
And appears prolonged. And very few companies out there created capacities being foresighted, one of them being yours. That when the opportunity comes, you don't have to go scurrying for capacity when the opportunity is right at your doorstep, rather than build it in advance. I was just looking at your long-term numbers. In last 5 years, from 19 to 23, your top line has almost doubled. And now the momentum for the sector is catching pace. Right now we are talking about almost 60,000 crore opportunity from new Vande Bharat trains, and every region is almost every fortnight we see one kicking off. How do you see your business accelerate? What I want insight from you is not day to day or year business, but when you were sitting with your investors, friends like Smallcap Fund and the marquee one which took stake, and when you're talking about the big picture, 3 to 5 year picture, how do you see your business accelerate or take off versus last 5 years?
So very, very interesting. So if you look at the growth that we've had in 2018, we were a 300 crore per annum top line company. And in March quarter 2023, we did about 970 crores. So we've definitely grown much more than even doubling. So we've kind of been able to keep that growth pace well. If you look at our order book, we are sitting on an order book of about 27,000 crores, which is almost evenly divided between the freight rail systems and the passenger rail systems. So, and then there are these, as you mentioned, the new opportunities that are coming up. The growth momentum continues to happen. So with all of this, we believe that our capacity that we are creating, that is now we are at about 700 wagons per month capacity. We are going to increase this to about 1,000 wagons per month capacity in terms of the freight rail systems. In terms of the passenger rail systems, we started with a planned capacity of 20 cars. Now we have upgraded our planned capacity to 70 cars per month. So with all of that, obviously, the runway ahead of us, or the opportunity ahead of us, is quite large. We would definitely endeavor, and when you say about preparedness and about opportunity, so we always believe in our organization that in order to become lucky, what is luck is basically opportunity combined with preparedness. And so we are continuing to be prepared for the growth that the market is likely to offer. And we shall continue to wait for the right opportunities in order to get lucky.
Right, Mr. Umesh, thank you so much for joining in with us, giving us an understanding in terms of, not only from the company point of view, but from the sector point of view as well, what should we be expecting.